The trucking and logistics sector hit hard last week on AI disruption fears. Names like RXO, JB Hunt, CH Robinson, and Expeditors all sinking after a new AI platform promised to cut freight inefficiencies and scale without adding staff. So, is this really a technology a threat to the traditional model or a market overreaction? Joining me now is Drew Wilkerson. He is chairman and CEO of RXO. RXO dropped more than 20% last week. The stock has since recovered some ground, but it remains below those pre-sell-off levels. Drew, I suppose that the idea here is that AI agents could be the middleman, kind of going into the market, finding providers of freight services, and obviously helping customers get what they need. Where do you stand on whether, in fact, your business is replicable in that way?
AI is certainly a tool, but this business is about scale, it's about relationships, and it's about service. And when you look at it, our top customers have been with us for over 16 years on average, and they're coming back to us time and time again because of the service that we provide, because of the solutions that we provide, because we have great technology that they have seen deliver results for them time and time again. So when you look at this, this is still a people-based business. And, if you go back a decade ago, there was a lot of talk in the asset-light industry about digital disruption and digital disruptors in the industry. For us, we didn't see that. We saw that we were the ones who came in and led with technology and built it from the ground up to deliver solutions for our customers.
You said that obviously the relationships is among the things that you feel as if is a moat for you. It's a competitive advantage. Talk a little bit about that in terms of what value you're delivering to these customers that they can't otherwise find somewhere else.
Yeah, so when you look at who we are, we do business with over half of the Fortune 100 companies, over half of the Fortune 500 companies. And so when you look at who they want to do business with, they want to do business with people who are able to service them at scale, folks that can do 50, 100, 200 loads per day. And then they want to see that your technology can go in there and drive results for them. Can it help them with mode optimization, meaning they can shift from a less than truckload into a multi-stop truckload, or from a truckload into multiple LTL shipments, and having the technology that powers them to create solutions. But they also value the relationships of teams that have delivered results for them for time and time again.
It seems as if, the market is rushing to this place of trying to figure out the kinds of things that big companies feel that they're overpaying for, or that they're paying for kind of layers and layers of stuff that's not really the core value proposition. Is there any concern that you have to reassure clients that they are, in fact, getting value for what you provide?
Yeah, but when you look at what's going on right now in the industry, you've got major regulatory things that are happening as far as drivers that are exiting the industry. So businesses want to know, how are you vetting your carriers? How are you vetting your drivers? Do you have the right processes in place? And for us, we were a business that was built on just-in-time shipments, on high cargo value. So the way that we vet our carriers is different than what the typical standards are in the industry. So it's a safety net for our customers as far as who is hauling their freight.
Aside from a lot of the AI chatter, what's your view on the underlying business trends at the moment? You mentioned some of the big shifts that have occurred within the industry. So how does the outlook for 2026 shape up?
There's a lot going on in 2026, and it starts with the capacity side. You have seen a lot of capacity come out of the industry, whether it was from non-domicile drivers or English language proficiency, and it's capacity that is a structural change to our industry. And I've been doing this for 20 years. This is the largest structural change that I've seen during my time of being able to do that. And that's why it's so important that customers have carriers that they know that can flex up on the capacity side to meet their demands. When you look at the overall volume on the demand side, that's still soft as far as where we sit here today, but there's a lot of things that we're watching that show some optimism as we go on throughout the year. The ISM report was strong. There were some things on the home building side as far as interest rates that are positive for the industry. For every new home that's built, it means 8 truckload shipments that are going out. And then we're also watching what's happening in the labor market very closely, because that will have an impact on retail and e-commerce.